Plans for spring and summer weddings. Talking about finances, especially taxes, may not be very romantic, but it can allow you to better plan before you get to the altar. Crystal Faulkner from MCM CPAs and Advisors is here this morning to talk about what soon-to-be married couples should be considering before the big day arrives. Good to see you, Crystal.
Thanks.
Because getting married does have an impact on your taxes, right?
It sure does. The first thing people need to understand is their tax situation is going to change. They will no longer file as single taxpayers. They will actually file as a married couple using either the filing status of married filing joint or married filing separate. And that status is determined on their marital status at December 31st. So regardless of when they got married through the year, if they were married on December 31st, that dictates the fact they have to file joint or as a single. And what they should do is actually calculate the tax using both filing statuses, joint or separate, to determine which tax results in the least overall federal and state tax.
So it may be some extra work, but it could save you some money in the long run. Now, I've heard of the marriage penalty. So what is that, and how can people understand if this is going to be something that happens to them getting hit with that penalty?
Well, Sheila, the penalty is really just a concept that occurs when people who are married actually end up paying more tax in some situations than they would have had they remained single. So sometimes it pays to be single. So the tax could be higher. You just need to understand that and don't be surprised. There could also be a bonus. So if one spouse actually made significantly more than the other, you could actually pay less tax because you're married. So you won't really know until you have a projection on your combined income.
Now, once you file married filing jointly, you can't change it back to filing single, can you?
You mean on an amended return?
Like every year, can you go back and forth between each one?
Yes, you can.
Okay.
Each year, you can actually determine whether single or separate results in the least amount of tax.
Okay, and then what are some of the other factors that people want to think about if they're getting married this year?
Well, just be careful, because there are the new tax law causes some taxpayers who are married to pay more tax. So, for example, the tax rates kick in at a higher threshold. And also, there are some benefits by being married. So, as you can see on the screen, the exclusion, the gain on the sale of your home, if you're married, you'd get to double that.
Okay.
If you're married, you may be able to take more itemized deductions, and in certain situations, your state taxes could also be reduced. So it's all not bad to be married.
Right, and the state taxes may offset the federal in some cases too. Crystal, thank you so much.